Few weeks back, I saw shares of Trident skyrocketing and I thought, what could be the reason behind it? Many of my friends were already holding it and enjoying the gains. However, I was still skeptical about this everyday upper circuit rally. Main reason why I had this doubt, as many of you may have, is that it's a penny stock and sometimes after a huge move, this can come down crashing and you can literally destroy wealth with this. But I never heard any bad news or controversies about this company. So I was curious about the business of this company and whether there is any possibility of more returns for investors in the future. Let's find out. Let's dive deep into the business of this company. Trident is one of the world's largest integrated home textile manufacturers. They have production facilities in Punjab, Madhya Pradesh, and the firm primarily operates in two business segments, namely textiles and paper. The company was founded in 1990 and it is still growing under the leadership of Mr. Rajinder Gupta, the chairman and a first generation entrepreneur. The company began operations with a modest 17,280 yarn spindles and currently exports to over 100 countries. The company's business is divided into four parts. Number 1 is yarn, number 2 terry towel, 3 bed linen, and 4 the paper business. Trident recently completed capex in the terry towel and bedsheet divisions and can now produce 90 metric ton terry towels, 43 million meters of bed linen, and 175 kilotons of paper per year. The company is the market leader in the Indian terry towel and paper industry, as well as major player in bed linen exports. Let's look at the pioneers of this business. Mr. Rajinder Gupta has over 3 decades of industry experience and now serves as the MD and chairman of the Trident Group. In 2007, he was awarded the Padma Shri for outstanding service in the field of trade and industry. He is a Harvard graduate who has also studied from ISB Hyderabad and Templeton College, University of Oxford. He also serves as Vice Chairman of the Punjab State Planning Board, that is PSPB. Mr. Abhishek Gupta is the current CEO of Trident and a graduate of University of Warwick. He previously led the commercial, supply chain project and operations team as well as the corporate marketing and innovation team. He obtained his marketing expertise from Harvard Business School. Let's take a brief look at the global textile industry. Asia is the major exporter of textiles and apparel, accounting for nearly 60% of total production. The main consumers of home textiles are Europe and the United States. The global home textile market was worth USD 94.73 billion in 2018 and is expected to grow at a 5.01% CAGR from 2019 to 2025. Demand is mostly driven by the United States and Europe, which account for 60% of total home textile imports, while China has the largest market share of 37% in home textile exports. India is at the second position with a market share of 11%, followed by Turkey. China plus one's changing regional dynamics and increased quality, the balance of power is projected to shift to India. Furthermore, India is the world's largest raw cotton grower with an abundance of labor, giving it an unrivaled advantage. Given the current state of the economy, it is expected that the home textile business, which includes bed and bath linen, would perform well in the short to medium term due to number 1, significant pent-up demand, number 2, improved hygiene, health and WFH awareness, and number 3, the extension of rebate of state and central taxes and levies, which benefits until 2024. This ensures the stability and competitiveness of Indian products in overseas markets. Key strength of this company. Trident is the largest maker of wheat straw-based paper with a capacity of 175,000 metric ton. It holds a 12% market share in the Indian copier category. Trident takes use of its geographical position in Punjab, the largest wheat growing state, to obtain wheat straw as raw material at competitive cost. In the National Capital Region and North India, the firm has 30% market share. It has a global presence in over 150 countries with exports accounting for 73% of revenues in first quarter of financial year 2022, and it has manufacturing facilities in Sanghera and Daula in Punjab and Budni in Madhya Pradesh. Trident's bed linen division offers a wide selection of bedding options including duvets, comforters, pillow covers and sheets. In comparison to bath linen, which was formed 20 years ago, it ended bedding solutions in 2016 when the market was still in its early stages and now has a fully developed client base. Trident has drastically decreased its net debt over the last 4 years from rupees 21.1 billion in 2017 to rupees 14.2 billion in 2020-21. In fact, Trident repaid rupees 10.3 billion rupees in debt in financial year 2021 alone. Because of its agro-based raw material, the company has the highest operating margins among paper competitors. Trident also has the highest dividend yield among large home textile peers at 1.7% and a 3-year average dividend payout ratio of 50%. Now, let us look at the future growth prospects of this company. Trident has recently released its Vision 2025 statement, which includes 3 goals. Number 1, achieving sales of rupees 250 billion by 2025 with 12% bottom line. Secondly, making Trident a national brand, and thirdly, navigating the digital journey through IoT, blockchain and digitalization. Trident has 6 months of order book, and according to US OTEXA data, India gained market share in sheets by 8% and towels by 1%. Also, the European Union has revoked Pakistan's Generalized System of Preferences or GSP, which is a preferential tariff system that provides tariff reduction on various products. Pakistan has a 20% share of US imports and a 10 to 15% market share in the European Union. If this occurs, Pakistan's exports are subject to a 20% import tariff in the European Union. According to the reports, only final parliament approval is necessary for the suspension, which could instantly add 20% or more to the company's bottom line. Piyush Goyal's appointment as textile minister, as well as expected announcements under the PLI scheme or National Textile Policy, are positive in the short term. Peer comparison. The major competitors are Welspun India, Indocount Industries and Himat Singha. Trident has the largest capacity of terry towels in India and is currently the 3rd largest player in the sheeting market. Trident is the only business among domestic textile companies to have completed all capex plans. The firm has recently adopted an OKR-based pay system, which has been embraced by just a few corporations in India, including Google. The company has employed 2,200 people in financial year 2021, approximately 16% of employees in financial year 2020, and is likely expecting excellent traction from its consumers. Trident is one of the few Indian firms with a 3,000-acre land bank, allowing for further developments to be planned without any additional capital expenditure. Good things apart, let's try to understand what are the key risks the company is facing. Number 1, exposure to volatility in cotton prices and Indian rupee. Trident's operating profitability is moderately sensitive to changes in the price of a key raw material, that is cotton, which constitutes 50% of the cost of yarn. Cotton prices are variable since they are affected by global demand and supply, as well as factors such as monsoons and pest attacks. Number 2, working capital intensive operation. Cotton, the primary raw material used in the home textile industry, is a seasonal crop, and excellent grade cotton is only accessible during the peak cotton season from October to March. Trident has a 4 to 6 month inventory at the end of the year, since cotton supply and quality are typically a concern during the off season. And finally, susceptibility to end user market slowdown and competition in the home textiles category. Trident derives nearly 70% of its sales in the home textile segment from the United States, making it vulnerable in any significant slowdown or change in import regulation in this market, as well as currency fluctuations. Furthermore, because its top clients account for a substantial portion of its textile sales, the company's fortunes are vulnerable to these customers' sourcing rules. Trident is attempting to increase its presence in Europe, the Middle East, Australia, and Asian countries in order to offset this damage. Let's take a look at the financials of the company. In the year 2009, the sales of the company stood at 1,397 crores, and in the March of 2021, it has increased to 4,531 crores. The operating profit in 2009 was at 254 crore, which currently in 2021 March is at 826 crores. Also, net profit stood at negative 53 crore in 2009, while in 2021 it has went on to reach 304 crores. Also, the dividend payout in 2009 was at 0%, while in 2021 it reached to 60%. Now, we will take a look at the balance sheet of the company. In the year of 2016 March, the borrowings of the company stood at 3,503 crores, while that reduced to a huge amount and it went on to become only 1,562 crore in the year of 2021 March quarter. The company's fixed assets stood at 1,497 in 2009 March, and it went on to increase and became 3,791 crores in March of 2021 quarter. Not only that, reserves of the company was just around 223 crores in 2009, and it became 2,819 crores in March 2021. Also, the return on capital employed as a percentage increased from just being 8 in 2009 to 10% in March 2021. Understanding the shareholding pattern. The promoters had just 68.45% of the share in 2018 September quarter. However, they increased that share to 73.02% in June 2021. The financial institutional investors held a share of 1.60% and domestic institutional investors held a share of 0.01%. Also, the public held a share percentage of 22.48%, with Trident Limited Employees Welfare Trust holding 1.96% and the government having a share of 0.01% in the June quarter of 2021. Let's try to understand if the valuations are justifiable for this company. Work from home, along with increased health consciousness in major cities across the world, have contributed to a revival in demand for home textile goods. The recovery in demand has been aided further by pent-up demand over the holiday seasons. The home textile segment is expected to grow at a healthy rate in the next years as a result of improved health and hygiene awareness, work from home opportunities throughout the world, easing logistical problems, and pent-up demand in the US and European markets. That is all from us. I hope you liked this video. Please leave a thumbs up, share it with your friends, subscribe, and leave a comment if you have any feedback for us. Thank you all. Take care. Bye bye.